Talk About It Tuesday. And it is the first Tuesday of 2022. So I want to first wish you a happy, healthy, and prosperous new year. Received a lot of questions, so I really appreciate it that you're finally utilizing this. I promise to get to every question, but today I'm going to cover two questions that are closely related. So here it is. When do you think the housing market might correct itself? I'm looking to buy, but not right now. And the second question, very closely related. What do you see for the 22-23 housing market? All right, so let's just break this down. So the first question, when do you think the housing market might correct itself? Now that's a funny term, correction. Usually when we have a correction, and it's a little economics lesson, we have what we call systemic issues, and then we have non-systemic issues, and in real estate, regional issues. So when we talk about systemic issues, we mean things that will affect the entire market, the entire economy. And so when you talk about a correction, that means you usually have hit a bubble, meaning that prices were overinflated, and since they were overinflated, the market will correct itself by coming back to what we call the mean. Right? So where prices are supposed to be. So the question assumes that there is this overinflation in the housing market and that the prices will come back down, which would be a systemic issue if you're talking about the entire housing market. I hate talking about the housing market as an entire big one monolithic thing because it's really not. So the systemic issues, let's just talk about those. In 2022, the Feds have already announced that they will raise interest rates. But right now, the interest rate is 2.9%. And so, just to give you something to compare it to, I bought my first property in 1996. And the interest rate that I paid on a 30-year fixed mortgage in 1996 was 7.5%. And I was excited because that was lower than what it had been prior. It's been 10, 12% in real estate before. So we're at 2.9%. So money is still easy to borrow, meaning it's cheap, it's available. So even if there are incremental increases in 2022, which is the prediction, what will we be at? 3.5%, 4%? It's still cheap. And if money is cheap and available, then people will continue to borrow, which means people will continue to buy. So if you're looking for a systemic issue that's going to make it go down, that's not it. So let's look at liquidity. How much money is out there in the market? The unemployment rate is low. We're at I think 6.6% nationally, and then regionally in other places it's below that. I know in New York it's like 4 point something percent. So there's a low unemployment rate, which means people are working. There was a record number of savings last year. There is a lot of money out there. So people will continue to buy. And as inventory continues to decrease, it will not make the prices go down. And that's systemic. But let's look at regionally. Regionally, there are phenomenal opportunities. And if we're looking at it as an investor, not a home buyer, a home buyer is a whole different thing because if you buy a home, it doesn't generate income for you. But as a home buyer, we're not as concerned with prices continuing to go up unless you were trying to buy and flip, right? And even then, if you're buying and flipping and the prices look like they're going to continue, and in the market, the region you're in, there are a lot of buyers, then it's a perfect opportunity to buy and flip. If you're talking about buying to hold, then you have to look at the long-term return on investment. And so you'll look at other things besides the price. The price could be going up, but are there demographic shifts in that area? Is there an industry that's coming into that area that pays a good wage for people? Is there infrastructure coming into that area? Is there local commerce that's changing? What is the political will? What is the 10-year plan there, right? So you go to city planning. What are the schools like? There's so many issues that you want to look at that would say, hey, the prices are going up because people are coming in, because money is coming in, because commerce is coming in, because this city is on an upward trend. This city is growing. So when you look at places like Indianapolis, Indianapolis is growing. The prices are going up, but the city is growing right now, and so the prices probably will not go back down, right? So it won't be a correction. This is the upward trend. There are other places in the country like that as well. Um, in some of the urban areas, you might have more inventory because some of the urban areas people fled during the COVID crisis when you had this hyper buying in suburban and rural regions, which left inventory in cities. Maybe you can grab some places in the cities as now they're starting to come back up. So 22, 23 market looks phenomenal for real estate, depending on what you're trying to accomplish, right? The rental market will still be good in certain areas, but it still will be terrible in others, right? And so when you look at, middle America, you have the worst opportunities. When you look at, the Northeast, the Southeast, even the West Coast, there are plenty of buying opportunities where you can make money for renters, right? There's plenty of rental income to be made, but you don't have to look at some of the traditional places. So maybe New York City is out of your price point, but maybe upstate New York, just a couple of hours outside of the city, is within your price point because there's a large push of people that are moving there. So it looks great, in terms of systemic issues that will, hit a peak and we go down into a recession where you can scoop up, massive deals all over the country. Not going to happen anytime soon. So as an investor, you have to look at different regions. You have to look at what your focus is and what you're trying to accomplish. And there are plenty of opportunities, and get it while the interest rates are still low and while money is still available in an abundance. So hopefully that answered your question. I'd love to hear your comments. Please like, subscribe, share, and I will see you next Tuesday.